The journey of the crypto market, from genesis to present and future, with a focus on Bitcoin. The cryptocurrency, crypto market, has undergone an extraordinary journey, evolving from obscure beginnings into one of the most controversial yet promising financial sectors in modern history. To better understand this landscape, we need to look back at its past, assess its present, and forecast its future, with a particular focus on Bitcoin, BTC, the currency that birthed the crypto era. Genesis, the desire for decentralization, and the birth of Bitcoin, 2008, 2010. Before Bitcoin emerged, the idea of digital currency had been brewing since the 1990s, with projects like DigiCash and B-Money. However, they all failed due to a lack of a reliable solution to prevent the double spending problem without relying on a trusted third party. The white paper, Bitcoin, a peer-to-peer electronic cash system, published in October 2008 by an anonymous entity named Satoshi Nakamoto, changed everything. This was the moment the blockchain was born, a decentralized, immutable, and distributed ledger technology that enables secure transaction recording without banks or governments. On January 3, 2009, the first Bitcoin block, also known as the Genesis block, was mined by Satoshi Nakamoto. This block contained a message alluding to the 2008 global financial crisis. The Times, 03 Jan 2009 Chancellor on brink of second bailout for banks. This message was not just a statement but a core philosophy. Bitcoin emerged as an alternative to the traditional financial system, where trust in centralized institutions was faltering. In its early years, Bitcoin was primarily known within circles of cryptographers, tech pioneers, and libertarians. Its value was almost zero, and early transactions were often experimental or involved trivial goods. The Bitcoin Pizza Day event in May 2010, when Laszlo Hanyecz used 10,000 BTC to buy 2 pizzas, clearly illustrated the nascent value of the currency at that time. Early growth and the emergence of altcoins, 2011-2013. Interest in Bitcoin gradually grew. Early exchanges like Mt. began to emerge, facilitating easier buying and selling. Bitcoin's price began to fluctuate wildly, experiencing sudden surges and deep corrections. This was the period when many began to recognize Bitcoin's potential not just as a decentralized payment system, but also as a form of digital gold, a scarce asset that could not be controlled by governments or central banks. Alongside Bitcoin's initial success, developers began experimenting with its variations. This marked the beginning of the altcoin, alternative coin era. Litecoin, LTC, was created in 2011, one of the first altcoins, aiming to improve transaction speed and mining algorithms. Peercoin and Namecoin also appeared during this period, paving the way for diversification within the crypto ecosystem. Bubble and crisis, 2014-2015. The crypto market wasn't always smooth sailing. 2014 witnessed the collapse of Mt. Gox, then the world's largest Bitcoin exchange, due to a cyber attack and the loss of hundreds of thousands of BTC. This event triggered widespread panic, causing Bitcoin's price to plummet and raising many questions about security and regulation in this nascent space. This period served as a valuable lesson about risk and the necessity of user protection measures. It also demonstrated Bitcoin's resilience. Despite a major shock, the currency survived and continued to evolve, proving the robustness of its underlying technology. The ICO boom and the birth of Ethereum 2016, 2017, 2017 was a pivotal year for the crypto market. The advent of Ethereum, ETH, in 2015, with its ability to create smart contracts and decentralized applications, dApps, ushered in a new era. Ethereum was not just a currency, but a programmable platform that allowed developers to build applications on the blockchain. This capability led to the explosion of initial coin offerings, ICOs, a new fundraising method where blockchain projects issued their own tokens in exchange for Bitcoin or Ethereum. ICOs attracted billions of dollars in investment, pushing the prices of Bitcoin and Ethereum to record highs. Bitcoin first surpassed $1,000, then $5,000, and approached $20,000 by the end of 2017. This event garnered global attention, transforming crypto from a tech niche into a financial phenomenon. However, the ICO boom also brought numerous problems, including scam projects, lack of transparency, and insufficient regulation, leading to a large speculative bubble. 5. Crypto winter and maturation. 2018-2020. After the 2017 boom, the crypto market entered a prolonged crypto winter throughout 2018. The prices of most cryptocurrencies plummeted from their peaks. Many ICO projects collapsed, and skepticism was widespread. This was a cleansing period, weeding out weak projects and forcing developers to focus on building real technology. Despite the price decline, this was a crucial period for foundational development. Blockchain technology continued to be refined, scaling solutions were researched, and decentralized applications began to form more seriously. Concepts like decentralized finance, DeFi, and NFTs, non-fungible tokens, began to emerge and gain traction. Traditional financial institutions also began to seriously explore blockchain and cryptocurrencies. The DeFi, NFT boom, and mainstream adoption, 2020, present. From late 2020 to early 2022, the crypto market witnessed another strong growth phase, fueled by the explosion of DeFi and NFTs. DeFi allows traditional financial services, such as lending, borrowing, trading, and insurance, to be conducted on the blockchain without intermediaries. The growth of DeFi has opened up many new opportunities for individual and institutional users. NFTs, unique digital assets owned on the blockchain, ranging from art and collectibles to in-game items. NFTs created an entirely new digital art and entertainment market, attracting celebrities and major brands alike. During this period, Bitcoin reached new all-time highs, surpassing $60,000 and then $69,000. More importantly, Bitcoin and other cryptocurrencies began to gain mainstream acceptance. Major companies like Tesla, MicroStrategy, and Square, now Block, started holding Bitcoin on their balance sheets. El Salvador became the first country in the world to adopt Bitcoin as legal tender. Spot Bitcoin ETFs were also approved in some markets, opening the door for traditional investors to access this asset more easily. However, the crypto market also experienced significant price crashes, such as the collapse of the Terra Luna ecosystem and the FTX exchange in 2022, causing substantial losses and raising many questions about the industry's sustainability and risks. These events once again highlighted the importance of caution and regulation in a nascent market. In-depth analysis of Bitcoin, BTC. Bitcoin is not only the first cryptocurrency but also the most important, acting as the reserve currency of the crypto market. To understand Bitcoin, we need to examine its core characteristics. Decentralization. Bitcoin is not issued by any central bank or government. The network is maintained by thousands of nodes, computers, around the world, ensuring no one can control or manipulate it. Finite scarcity. A maximum of only 21 million bitcoins can ever be created. This scarcity is hard-coded into the algorithm and cannot be changed. This contrasts with fiat money, which can be printed without limit, leading to inflation. The halving mechanism, occurring approximately every 4 years, reduces the amount of new Bitcoin created, reinforcing its scarcity. Immutability and transparency. Every Bitcoin transaction is recorded on a public ledger, blockchain, and cannot be altered or deleted. This provides absolute transparency and auditability for everyone. Divisibility. One Bitcoin can be divided into 100 million smaller units, called Satoshi, sats. This allows Bitcoin to be used for smaller and more flexible transactions. High security. Bitcoin is protected by a strong cryptographic algorithm and the proof-of-work (POW) consensus mechanism, which requires immense computational power to mine and validate transactions, making network attacks extremely costly and impractical. Borderless. Bitcoin can be sent and received anywhere in the world, requiring only an internet connection, without being restricted by national borders or bank operating hours. High price volatility. Due to the nascent nature of the market, lower liquidity, and sensitivity to news, Bitcoin often experiences significant price fluctuations, offering high profit opportunities, but also considerable risks. Bitcoin's roles. Digital gold. Many view Bitcoin as a store of value similar to gold, capable of hedging against inflation and economic downturns. Payment system. Although not yet widely used for daily transactions due to price volatility and transaction speed, Bitcoin remains a potential means of payment, especially for cross-border transactions. Investment asset. Bitcoin is an attractive investment asset for both individual and institutional investors, despite the high risk. Anchor of the crypto market. Bitcoin's price often serves as the main indicator for the overall trend of the entire crypto market. When Bitcoin's price rises, altcoins tend to follow suit, and vice versa. The future of the crypto market and Bitcoin. The future of the crypto market and Bitcoin holds much potential, but also many challenges. Mainstream adoption, more corporations, financial institutions, and governments will continue to embrace Bitcoin and other cryptocurrencies. Crypto-related financial products, like ETFs, will continue to develop, attracting more capital from traditional investors. Clearer regulation. Governments worldwide will continue to develop regulatory frameworks for cryptocurrencies,